Hello and welcome to today's video on the types of risk in derivatives market. As we all know, derivatives are powerful financial tools that can help investors and traders to manage their risk. But it's important to understand the different types of risk involved. First, we have market risk. This is the risk that the value of a financial instrument or portfolio will fluctuate due to changes in market condition. For example, if you're holding a futures contract on a commodity and the price of that commodity drops, you will lose money on the contract. Next, we have credit risk. This is the risk that a counterparty to a derivative contract will default on their obligations. For example, if you are holding a credit default swap and the issuer of the underlying bond defaults, you may lose money on the contract. Another type of risk is interest rate risk. This is the risk that changes in interest rate will affect the value of a financial instrument or portfolio. For example, if you're holding a bond and interest rate, there is an interest rate rise, the value of the bond will decrease. We know that there is an inverse relationship between the bond price and the interest rates. In addition, we have liquidity risk. This is a risk that an investor may not be able to close out a derivatives position at a fair price due to a lack of market participants willing to trade the contract. Lastly, we have operational risk. This is the risk of loss due to inadequate or failed internal processes, systems, human errors, or external events. It's important to note that derivatives can be used to manage all of these types of risk, but they can also introduce new risk if not used properly. It's essential for investors and traders to have a clear understanding of the underlying asset, the terms of the contract, the types of risk involved before entering into the contract or entering into any derivative transactions. In conclusion, derivatives are powerful financial tools that can help investors and traders manage risk. But it's important to understand the different types of risk involved so that we have covered that is market risk, credit risk, interest rate risk, liquidity risk, and operational risk. There are some types of risk that can these are types of risk can arise in derivatives market. So by understanding these risks and knowing how to manage them, investors and traders can manage or make informed decisions to make use of the derivatives in a proper way. Thank you for watching. I hope you found this video informative and interesting.